In this video, we are going to be concluding our discussion on market sentiment overview and capital flow. This is going to be the part two of the video on market sentiment overview, sentiment overview, and capital flow. Like I mentioned in the part one of this video, we have four major types of sentiment overview types. I just want to go over this for the benefit of those that have not seen the part one of this video so that you can really have an idea of where we are coming from. So the discussion is market sentiment overview and how it relates to capital flow. And in the first part of the video, I identified the four types of market sentiment. Then I discussed extensively two out of these four parts, and of course, I promise that the second part of the video is going to now focus on the remaining two of these four parts. But then let me quickly go through the four parts or four types, I mean to say, types of market sentiment. Market sentiment. So I said we have risk on sentiment, risk on sentiment, which of course I've discussed. I discussed the capital flow and the capital outflow and capital inflow. And of course, I identify risk on dollar aversion sentiment, dollar aversion sentiment. Then we have the risk of sentiment, risk of sentiment. Then number four, the risk of dollar aversion sentiment. So in this video, I will discuss extensively on these remaining two, the risk of sentiment and the risk of dollar aversion sentiment. Now, what we'll do is, of course, like I did in the first part of the video, let's start with the risk of sentiment. Risk of sentiment. Then we want to identify the capital outflow, currencies out of which capital will flow during a risk of sentiment. But before that, what do we mean by risk of? Just like you are switching on and off a particular switch, and there is need for you to understand or to have an idea of what risk of means in the context of the forex market. Now, risk on, have explained that to say risk on is when investors are ready to really put their money on the line, and that is because there is a level of stability that was observed on the global level in the investment environment. So investors, they are really ready to risk, and of course that is why it is called risk on. In situation like this, you will notice that most of the index, like for example, the S&P 500 index is going to be on a bull run, and of course, we have the Nasdaq Composite Index too will be on a bull run, which implies that investors, they are really pumping money, into different assets across different locations or currencies or countries of the world. Now, the opposite of risk on is risk off, and this is when investors notice that there is a level of uncertainty which might be due to maybe global happenings that are natural based. For instance, if there is maybe a pandemic that is not as if it was a result of a particular policy from a particular leading nation, you know, that will cause a level of uncertainty. And of course, once investors notice something like this, they want to take caution. And of course, when they take caution, it means they will withdraw a level of investment from across their investment portfolios, and they will be looking to channel their capital into area where they feel their capital will be safe. So risk off is when there is uncertainty in the market. Like I said, it could be caused by something that is natural. Maybe there is pandemic, there is the outbreak of a particular disease, just like the COVID-19. It could also be caused by maybe there is a war or something between two key countries or economies, or maybe we have something like just the recent tariff war. This could be like a policy tussle across countries, and because of this the investment environment become uncertain. Because of that uncertainty, investors is like they want to take caution. They want to save their capital, they want to save their fund. Because of that, everybody will be withdrawing their investment, and they will be channeling the investment to where they believe that this investment will be safe for at least the period of time before which they believe this uncertainty will settle down. So what am I saying in essence? For you to know whether there is risk off or risk on, you need to gauge the level of readiness of investors, to pump money into the investment environment. It might be to pump money into stocks of different countries, that we really gauge. And of course, we use something like the S&P 500 to get that. And if there is risk on, investors will be pumping money. Now the reverse is what we are considering now in this case now, that there is risk off. Now this risk off means that they are now withdrawing their investment, and this will be evaluated by, you will notice that the S&P 500 index, among other indices, will be falling. The Nasdaq Composite Index too will be falling, the Dow Jones Industrial Average Index too will be falling. And by the time you look at the S&P 500 volatility index, you will notice that it will be slightly above 20. That is when it is certain that there is panic in the market, and that is what we call risk off sentiment. When this happen, it will play out in terms of currency or capital flowing away from some currencies, and of course capital will now be flowing massively into other currencies. Now let me quickly identify those currencies out of which capital will be flowing out of. Then I will also identify currencies where capital will be flowing into. So during a risk of market sentiment, you will notice that currency will be flowing out of the high yield commodity currency, say the like of AUD, the like of New Zealand dollar, the like of Canadian dollar, the like of euro, the like of GBP, Great British Pound. Now, these are the currencies that will experience predominant outflow of capital during a risk of market sentiment. And of course, the other is the one that will experience an inflow. These are what we call the safe haven. Like I said, that when there is risk, okay, let me just, this is outflow. Now for inflow, so that we really get it, capital inflow during risk off. Capital will now be flowing into the safe haven currencies and commodities. For instance, in a risk off sentiment, you will see that capital will be flowing into the US dollars, capital will be flowing into the Swiss franc, capital will be flowing into Japanese yen, and of course gold as a commodity, a safe haven commodity, capital will be flowing into gold. Now, if you notice that the market overview or the market sentiment overview of a particular season or a particular period is risk off, you want to take note of your choice of currencies so that you will not be buying a currency out of which capital is already flowing away from. In essence, during a risk off sentiment, you want to be buying currencies like the US dollars, currencies like the Swiss franc, Japanese yen and gold, because capital will be flowing massively in the direction of these currencies. And of course, you want to be selling on the other side currencies like the Australian dollar, the New Zealand dollar, the Canadian dollar, the euro and the GBP. So that's for risk of sentiment. The second the fourth type now, but for this particular part of the video, the second type of market sentiment is now risk of dollar aversion. Let me repeat myself. We identify four different types of market sentiment overview. We said we have the risk on sentiment, we have the risk on dollar aversion, and I've discussed these two in the first part of this video. Now, for this particular part of the video, I'm discussing the remaining two, which is the risk of sentiment and the risk of dollar aversion sentiment. So, and I've dealt with the risk of sentiment. Now, I want to quickly run over the risk of dollar aversion. What do you expect? Which currency or which asset do you expect I beg your pardon, to be flowing out of and currency to be flowing into? So during a risk of dollar aversion market sentiment, you will notice that you will have capital outflow, from now. Dollar aversion means that investors, they are losing confidence in the United States economy, so they are dumping dollar massively. So you will notice that there will be outflow of capital from the US dollars. This is where you will see the DXY will be selling, predominantly now will be selling. So capital outflow away from the US dollar. Notice risk off means that capital is flowing away from the high yield commodity currencies. So as capital is flowing out of US dollar because of the dollar aversion, capital will still be flowing away from the AUD, Australian dollar, away from the New Zealand dollar, and of course away from the Canadian dollar. Now capital will now be flowing into remember, we have two currencies that are largely dollar aversion currency. So anytime capital is flowing out of dollar, you will notice that capital will now be flowing into capital inflow. Now you will notice that capital will be flowing into the euro, capital will be flowing into the GBP, capital of course will be flowing into all other safe haven currencies, because we still have a risk of sentiment. Do you get that now? Then of course, number 5, you have gold as a commodity. And now the essence of this discussion is for you to be able to ascertain the tone of risk sentiment of the market at any point in time before you take your decision. Currently, the tone of the market now is still risk on dollar aversion. Risk on dollar aversion, that's the tone of the market as of October 2025. You see, so if you want to take a decision, you will be looking at, okay, where is the capital flowing out of? Because we have dollar, risk on dollar aversion now. Where is the capital flowing out of? Where is it flowing in? That is how you pair your currency. And of course, you can now look at the fundamental storyline, then you will now merge it with the technical storyline before you can now take a position. I believe that this video would have added, a level of, clarity to your understanding of how the financial market, especially the forex market, play out. And of course, I want you to stick to this channel so that you will still get subsequent video that will add flesh to some of this information, so that you can know how to apply them in real time. I remain Mr. Akimbode Damilola, the king of waves. I want you to subscribe to this channel, and because we are building, community of professional forex trader, and this is a long journey for us. I believe you want to be part of this journey. Till I see you again in the next video, stay blessed. Thank you.